The first week of April is one of the busiest weeks of the entire year in the real estate market. Why? Well, buyers are coming off the sidelines. They're starting to prepare for summer. Spring break is over, and it's time to make that groove into what we consider the selling season. Now, the selling season technically has been going on for the last few weeks. Now, since the beginning of April, that means we have March numbers out. And this is one of my favorite months to really dig into the numbers, find out what's going on. Q1 is over. How did we look compared to quarter one of last year? How are these tariff wars affecting everything? Stock market, not so happy, but how's that affecting everything else? Interest rates are dropping a little bit, which should make it interesting if you're a seller right now. But all these tariffs have buyers scared. So is it just balancing itself out? Well, that's what we're going to take a look at today, ladies and gentlemen, in our Denver market. And if you're not familiar with me, my name is Alex Saldana. I've been a local agent since 2010, helping hundreds of buyers and sellers relocate across town. And if you want the most up-to-date information on the Denver market, just get on my weekly email list. There's a link in the description below. So let's just jump right into it, take a look at all the numbers, find out what our Denver market is doing. Starting with new listings here, just purely supply and demand economics. What is going on? Well, new listings. We're peaking up here in some numbers, ladies and gentlemen. We can see we've got 27% more inventory coming to the market, new listings as of March versus last year. So what that looked like in March is 10,200 new listings to hit the market. Now, this is the entire Denver Metro MLS. So all the way up Boulder, even some of Fort Collins, Colorado Springs, kind of the front range. Compared to last year, we had 8,000 come to the market. Had 10,200 this year. That's a significantly big jump of new listings to come to the market. But are the going under contract and close just sucking up this inventory? Like, are we just going to see a much more active year in real estate? Well, let's keep going on here. So active listings, how many listings are sitting on the market no matter what their age is, right? Not just necessarily over the last 30 days. 17,500. This is also a good size jump, up 41.5% year over year. So that is 17,500 active properties that you can search right now in the Denver Metro MLS. Compared to last year, that was 12,400. That's starting to get big. So what we're looking at here is a 5-year timestamp, right? We're just seeing the wave. Every time spring comes around, we, start on the upticks of how much inventory is available out there. So let's look back in time. This is a 15-year chart. All the way back at the beginning was 2010. The last time we had this much inventory, and this is going to keep going because each peak is generally around August or September. Last year was September. The year before was September. The year before September. Pretty solid trend here. So this is going to keep going up for the next few months. Last year in September, we had 21,000 units on the market. And in March, we had 12,400. So we're already up 41%. The last time we had that much inventory, 21,000 units, was back in 2012. If you remember 2012, it was still a little uncertain feeling, right? I know the crash was in 2008, and it took really till 2010 to 2012 to bottom out before it started rising. And then we've been in the same market for the last 10 years, essentially, right? So we're going to keep an eye on this. Supply and demand, pretty simple. More supply there is, the less demand there is, then the more pricing is going to be pushed down. But I will keep you posted as we go along. So now, pending listings. Boom. All right. Another notable increase. We had a lot more new listings coming to the market. We have a lot more active sitting there. But look at this. We went up 7,700. Look at that jump from February, went from 5,300 up to 7,700. Another 2,400 units to go under contract than the month before. Now that number is up 17% year over year. So last year we put 6,500 under contract. This year, 7,700, another 2,200 units under contract. Again, that is significant. So that's going to help us with all these newer listings and active listings sitting there to, again, balance out the inventory. We haven't seen in the last 2 years any numbers reach that. And usually April or May is about the peak for properties going under contract. Okay. So if we continue this trend and we go up, over this next 30 days, like we're going to be competing with the COVID numbers, which were phenomenal, right? Now, there are a lot more properties for sale. So we're not having the bidding wars like we did back during the COVID days. But it's still keeping prices stable. Closed listings, boom, jumped up to 5,700. Now, compared to the year before, that was only 0.9% higher. So basically flat year over year for the amount of closed listings. But over the next 30 days, we should see a big jump on this because of how many went under contract, right? So last year, for example, May was the peak closing month at 7,100, and April we closed 6,300. So 500 more to go before we beat last year's numbers. I'm pretty confident we are going to beat last year's numbers, to be honest with you. Days in MLS dropping like a rock, as it always does this time of year. The average days on market right now is 55. Now, it's still only compared to last year, where the peak time to be on the market was in January. Same thing with the year before. So this year we peaked out at 67. So we are sitting on the market 17% longer than we did last year still. So just something to keep in mind. Not everything's flying off the shelves. Month supply of inventory is creeping up. We got 3 months of inventory available. This is easily going to get above that 4 months of inventory mark, I would say, this year, which puts us in an officially balanced market. Okay. So keep an eye on that. Showings to going pending, we're looking at 10 showings to go pending. That's down from 13. So that's a good sign. That means the people that are out there are putting offers out on properties and they're going under contract. And then the shows per listing, that's going up, right? 6.3 showings per listing. So as what happens every single spring is that people are coming off the fences. It's getting into the summer months. We're getting excited. The weather's getting better. We're having an occasional snowstorm. Don't plant those plants just yet. Wait till Mother's Day. Trust me there. And, things are feeling okay for the most part, right? Buyers are excited. And then, of course, the closed price is up month over month. Thank goodness, from 565 up to 570. So up, almost 1%. But year over year, we are flat. Okay. So last year in March, we were at 570. This year, we're at 570. We creeped up a little bit more. And so we'll see what happens over the next few months, over the next 30, 60, 90 days tops. That is the peak time for prices. And then they start trailing as we get towards the end of the summer months there. Now, how are we in Denver here tracking compared to the national averages, right? So just to pull up a few numbers here, as far as new listings on Redfin, this blue line is new listings. It looks like we've got more than the previous 2 years, 2023 and 2024, but not as many as 2022 yet. So that's a good sign that we're not peaking out on inventory that we have over the last 4 years. The amount of properties going under contract, not as strong as the last few years, so down 2.3%. We seem to be a little bit of an anomaly here in Denver in comparison, as our numbers are kind of through the roof right now. Homes sold, we are down 3.3% over the last couple of years. Median sales price, we are up 3% year over year nationally. So what that tells me is that, the national median price is at 386. We're here in Denver, we're sitting in the just about 600s, right, for the median price. And if we narrowed that down even further to Denver, that number is going to be that much higher. I think Denver proper is well in the upper 600s right now for the median sales price. So we're tracking with some of the numbers, but the overall median close price here in Denver, we've been fairly flat over the last few years, but we had such a massive run up over the COVID years that I don't know if I can say anybody is truly surprised from it. Now, where do we go from here? What's currently sitting at our market with my feelings from the first week of April? Well, I've had a couple to go live just on the market just this last week, and they were a bit slower than I would have thought, right? I would have thought for 4 to 6 showings per property, and we're seeing showings just trickle in right over the first weekend. Now, the weather wasn't great this first weekend. Maybe that has something to do with it. But overall, I think more importantly, the last couple of days in the stock market have had a little bit more to do with it, being that the stock market is down, what, 10% just over the last couple of days, and is down almost 20% from the beginning of the year with threats of tariffs. And that kind of puts a lot of people into a holding pattern, right? They don't really want to step out of their comfort zone, and so even if that takes 10% of the buyers out of the market, that's going to have a big impact across the board. Now, on good news is that interest rates are dropping a little bit. And so we can see here on the 30-year conforming loan, we're sitting down to 6.48% for your typical 30-year mortgage. And in the last 2 years, yeah, we had this period last year in September that was around the low sixes, but we're tracking to get it lower. So if there's one upside to anything with the stock market not being good, is that it's going to drive interest rates down, which will be good for buyers, right? Now, what about the whole fact out there of like, oh God, the stock market's crashing, real estate's right behind it? I don't buy into it. I just don't. And here's why. There's a lot of money sitting on the sidelines, right? I think Warren Buffett is like the highest cash level he's been in decades. Okay. And there's a lot of people in that same boat. And when things do get sour, right, these big hedge funds, they've got cash they're sitting on. I think they will come off the sidelines and start scooping up inventory again with lower interest rates. Therefore, keeping prices a bit more stable, right? Our population is still going up in the US, meaning there still needs to be more homes. People are still going to be renting properties, still people are still going to be buying properties, and I think they will get back in the game because they haven't been in a while. So, if you're okay with riding out a potential storm over the next year or two where prices may drop by 10 to 15% or so, I can't say it's a bad time. But people like to blame us as agents for if it's a good time to buy or if it's a good time to sell. Like, we don't know any more than you do. Something could happen tomorrow and the whole market could go sideways. But I will say, historically, if you've tried to predict it, and you've tried to predict the market going south, you've been wrong more times than not, period. Heck, during COVID, I thought we were going to be crashing and burning like crazy. And we all saw what happened to the market. I was clearly wrong. Now, did I advise people not to buy? No. I just put the caution out there that we don't know what's going to happen, right? And so I think you see out there on a lot of social media, people fear mongering, and they've been fear mongering since 2015. Okay, go ahead, look up Robert Kiyosaki, the author of Rich Dad Poor Dad, and you're going to see he's been writing about a market crash since 2015. That was what, 300% ago, right? So everybody can be wrong, and you got to do what's good for you and your family. Buy in the right spot, buy what works for you. And I am here with whatever questions you have. So feel free. Contact information here is below. Happy to talk to you at any time. And until the next time, happy housing.